Joining me now is Toney, founding managing partner at Plexo Capital, and the CNBC contributor. All that stuff about the durability of AI demand, Jensen talks about every quarter. And, I mean, we're not even going to talk about what happens if he misses numbers because, oh, my goodness. He's got to make the numbers and then some, right? So what more can happen to keep this train rolling?
Well, everyone looks to signals for boom versus bust. And for this moment, it's a bellwether moment because it's more than just reporting the earnings in the print. It's more around the direction of the market, to your point. And so I think what we want to hear is that they are going to be able to beat their numbers because a beat is a meet. If they meet their numbers, that actually might be perceived as a miss. And even more importantly, it's the narrative around what is happening in the market, what they're seeing. Here's a word we don't want to hear. We don't want to hear the word digest because that means there's a slowing down so that the hyperscalers can actually make sense of all their commitments. I think what we want to hear is there's an appetite for more and that it's not slowing down. So those are the things we want to watch for.
Well, let me bring in a man who does want to hear that word digest, Jay Goldberg, senior analyst at Seaport Global Securities, only analyst with a sell rating right now on Nvidia. Jay, it's lonely in a sell right now. Why do you think you can get away with that?
So my thesis for a long time has just been that Nvidia is going to underperform. And I think that's played out since I launched coverage back in April. I think the simplest way to put it is there's a lot more that can go wrong for Nvidia that can go right. There's just so many, they're so big and there's so many headwinds. And to Lo's point, so many expectations built on top of them now that it's hard to surprise people to the upside on that. And so there's a lot of pressure on them. I think they might be able to pull it off this quarter or for the guide for Q4. But I think it's just going to get harder and harder as we progress through next year.
Yeah, but arguably it's gotten harder and harder all this time, and yet they've done it. If you believe that this AI revolution is actually going to play out, how long can you afford to bet against Nvidia? How far ahead of itself do you think the stock is?
So that word "if" is a big one there. It's doing a lot of work. I'm a believer in AI, the potential for AI technology over the long term, but I think the adoption is not going to take place in a straight line. And we're going to have ups and starts. And I'm a semiconductor analyst, and semis are cyclical. They always have been, and they will continue to be so. And I think what we're seeing is we're getting near the top of the cycle, and things need to Lo's word, digest for a little bit. And I think we're going to hit that at some point next year.
Okay, well, that's the word that you don't want to hear Jensen say. I guess Jay can say it. But right now, there seems to be some skepticism about AI playing out in software stocks. Certainly. I mean, the semis and some of the infrastructure stocks are doing fine, but a lot of the software companies, there's concerns that the LLMs and maybe some others are going to commoditize their business. How does that set up the overall AI trade? To what degree does that influence Nvidia?
Well, I think one of the big things that we see is just the enormous amount of infrastructure spend. So Morgan Stanley estimates that over the next 5 years, we probably will need to see about $3 trillion in spend. If we think about historically how software companies have been able to build that, is from the cash flows of their business. That's why they're so attractive. But when we start to look at that amount, probably only about half of that is going to be financed through cash flows, and the other half will need to be financed through debt. Perhaps we are seeing some of the blueprints in deals by both Meta and Oracle. Meta doing a deal with Blue Owl, creating a separate entity in the form of an SPV to keep that, call it $30 billion off their balance sheet. And I think that may indicate what we'll start to see. So that gives a little bit of pause to think about this new world that we're entering. But let's look at the other side of that as well. You know, these are companies that have good credit rating on their businesses, and they probably wouldn't want to risk making those types of bets if they weren't really confident about it. But we're entering a new age, and you mentioned the LLMs. Tough to really monetize those. We need to look up the stack a little bit at the application layer. And I think as models get more efficient, which is one of the reasons why we invested in Anthropic, which is a Plexo Capital portfolio company, is because of Dario's focus on making the models more efficient. That efficiency ultimately will drive to the next era of model training, high spikes in GPU usage, inference, the ability to think about the agentic side. So the autonomous decision makers, virtual assistants, Those are the things that are much more durable, and having more efficiency on the models and even for driving inference, that creates enterprise usage, which will be much more durable for revenues.